So we put out, ended up in, and then I had to go back to her. And then I was until like.
Good morning. Welcome to the meeting of the Board of Commissioners for February 17th. We'll begin, as is customary, with the observance of a moment of silence. Thank you. Please rise for the pledge to the flag. Pledge allegiance to the
flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Public comment. See no takers. So we'll move on to the approval of the minutes, Commissioner. The February 3rd meeting.
I'll make a motion to approve the minutes subject to review since I didn't have a chance to read them yet.
Second the motion. Guess we won't ask for additions, deletions, or corrections since they're pretty hard to come up with. All in favor of the motion, please indicate by saying aye.
Aye.
Opposed, same sign, so moved. Mrs. Nguyen, good morning.
Good morning. We had receipts on 2/15 and 2/16 of $2,314,893.56. That brought us to a total cash of $3,950,285.12. Our expenditures were $2,536,226.93. The tax claim is $99,893.86. So that brings us to a balance of $1,314,164.33.
I'll make a motion to approve the treasurer's report subject to audit.
Second the motion. Questions or comments for Treasurer Newman? Not all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
Okay, thank you.
Thank you, sir. Good morning. You may introduce yourselves and then proceed.
Michelle Snavely, Director of Human Resources. Stephanie Knoll, HR Benefits Coordinator. Under Personnel Transactions, Resignations and Terminations, Harry Long, Part-Time Homeless Assistant Manager, Community Action Partnership. Termination effective February 16th, last working day, January 14th. Brian Heibel, Full-Time Central Booking Agent, resignation effective February 26th. Eden Sanchez, Team Clerk and Domestic Relations, resignation effective February 3rd. Ms. Dial Rivera, Network Technician and Information Technology Services, resignation effective February 25th. Amber Smith, Full-Time Correctional Officer, resignation effective her last working day, February 8th. Douglas Grove, Adult Probation Officer 1, resignation effective March 1st. Amber Whitman, Casual Part-Time Developmental Assistant, Renova Center, resignation effective February 4th. And Janet O'Boyle, Accounting Clerk C in the Treasurer's Office, resignation effective February 7th.
I'll make a motion to approve resignations and terminations.
I'll second the motion. Any questions? Hearing none, all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
Under leave of absence, Karen Feister from MHIDEI, 8-week paid leave of absence, returned February 7th.
Make a motion to approve Karen Feister for a leave of absence.
And I'll second the motion. Questions? Discussion? Hearing none, all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
Under changes of status, transfers, and promotion, I have a motion to approve the 2022 Civil Service Compensation Plan, which pertains to Children and Youth Services, MHIDEI, Area Agency on Aging, and the Commission on Drug and Alcohol Abuse funding for the 2022-2023 fiscal year.
I'll make a motion to approve the Civil Service Compensation Plan for 2022 for the social services.
I'll second the motion. Any questions regarding this document? Not all in favor of the motion, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
Catherine Winters, promotion from Customer Service Clerk in Domestic Relations to Team Clerk in Domestic Relations at the rate of $950.74 biweekly effective February 21st. Colleen Brodas, promotion from docket specialist in domestic relations to team clerk in domestic relations at the rate of $950.74 biweekly effective February 21st. Cindy Weidman, promotion from general clerk C in the recorder of deeds to second deputy in the recorder of deeds at the rate of $1,201.82 biweekly effective February 21st.
I make a motion to approve the changes of status transfers and promotions as presented.
And I'll second the motion. Any questions or comments? Not all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
Under other transactions, Area Agency on Aging would like to rehire Michelle Kaufman as a volunteer resource coordinator 1 at the rate of $1,439.77 biweekly effective March 7th. Children and Youth Services would like to hire Janelle Rodriguez as a clerk 2 at the rate of $867.07 biweekly effective March 7th. Children and Youth Services would like to hire Emily Nichols as a caseworker 1 at the rate of $1,227.25 biweekly effective March 7th. President Judge Tillwalk would like to hire Gary Love as a jury attendant at the rate of $10.75 per hour effective March 11th. President Judge Tillwalk would like to hire Marin Cavallo, jury attendant at the rate of $10.75 per hour effective March 11th. President Judge Tillwalk would like to hire Anthony Giuliani as a law clerk for Judge Jones at the rate of $1,582.59 biweekly effective March 7th. And President Judge Tillwalk would like to hire Catalina Hoyos as a DJ clerk for MDJ Figueroa's office at the rate of $809.26 biweekly with $57.69 biweekly interpreter pay effective February 22nd.
Make a motion to approve these new hires and rehires, and under rehire, I'd like to welcome back Michelle Kaufman to the Area Agency on Aging.
I'll second the motion. Any additional comment, question, discussion? Hearing none, all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
Moving on to salary board, motion to approve all transactions previously read plus the following. Bradley Collins, sign-on bonus, full-time correctional officer at the jail, a $1,000 one-time payment for a 90-day sign-on bonus effective March 10th. And Michael Kahn's referral bonus, full-time deputy sheriff in the sheriff's office, one-time referral payment of $1,000 effective March 10th.
Are these the first ones to come through? Oh, I was gonna say, I don't remember them before. Well, that's wonderful. I'll make a motion to approve the sign-on bonuses and referral bonuses for the salary board. I'm sorry, Angel, do you wanna?
I'll second.
Thank you, I'm sorry.
Any questions on it? Any comments additionally? Not all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
Under conference seminar request, under mandated, Karen Moyer, Sharon Gasser, Susan Emmerich, Eunice Educay, and Kelly Denny from Children and Youth would like to attend PCYE meeting in State College on March 31st. $375 registration fee, mileage and parking reimbursement, 6 credits mandated by DHS. John Fitzke and Son Kim from Planning would like to attend PennDOT's 2022 Municipal Road Maintenance and Safety Symposium in Hershey on April 24th through April 26th. $158 registration fee, mileage reimbursement mandated by PennDOT.
I'll make a motion to approve the mandated conference and seminar request.
And I'll second the motion. Questions or comments regarding the motion? Not all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
Under non-mandated, Michael Anderson from Domestic Relations would like to attend DRS Directors Regional Meeting in Cumberland County on March 8th. No registration fee, mileage, meal, and parking and toll reimbursement.
Make a motion to approve the non-mandated conference request for Michael Anderson.
Second the motion. Any question or comment? Hearing none, all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so ordered.
Thank you.
Thank you.
Thank you.
Sure.
You have 20 minutes to talk about a tractor.
Speak,
Talk about a tractor for that long.
speak slowly, please. You may even spell if you like.
Good morning, Commissioners.
Good morning.
Good morning, Tom.
My name is Tom Cote. I'm a Lebanon Valley Rails to Trails board members, and we're coming before the Commissioners this morning to ask for their approval to submit a grant request to DCED for local share account horse racing gaming funds. About $880,000 has been set aside for Lebanon County, so we're applying for a grant that works against that amount of money. It's a single application that goes to DCED. I believe we've given you a packet of information about the application. We're asking for a new, larger storage shed that will be placed at the Colebrook Rail Trail head. And we're also asking for the purchase of a larger tractor. As the rail trail grows and as we have maintenance needs and operational needs, our two smaller tractors just aren't cutting it. We need a larger, heavier, more sturdy piece of equipment for safety reasons for our volunteers and for making the operations of the rail trail and the maintenance of it much easier and more efficient. So we're asking for this grant from DCED. The funding splits are as follows. From DCED, $38,400 for the tractor. The local share will be provided by Lebanon Valley Rails to Trails, Inc. That's $9,640. The storage shed, we're estimating those breakouts would be $9,600 from DCED and $2,400 from the Rails to Trails. If there's any cost overages for these purchases, they will be absorbed by Lebanon Valley Rails to Trails, Inc. So the total grant application is $60,000. We would hope, once this approval is granted, that within 90 days, the facilities will be in place and operational. And the old shed that's currently at Colebrook will go out to the northern part of the county where we have a standalone section of the rail trail north of Jonestown. We really need storage facility and space out there so we aren't transporting equipment daily and weekly from the southern part of the county where our storage facility is all the way north. This will save us a lot of time and expense in moving equipment back and forth. So that is the request that we're asking your approval of. The grant will be submitted by Lebanon County Planning Department on behalf of LVRT Inc. John Fitzke and Julie Cheney will be submitting that application. There's a $100 application fee that goes along with it. Believe it or
That's
not.
new.
A $100 application fee now, and Julie will be using her county credit card to do that application.
Why are they charging a fee? Do you have any
It's
clue?
actually always been that way. We've submitted 2 prior grants, and there's always been a $100 application fee.
Oh, really?
Yeah.
Just for this program?
Yes. No, for all DCED single application programs, there is a $100 application fee. Yeah. Yeah. Maybe they do that to cut down on willy-nilly applications. I really don't know.
Usually governments, have a courtesy that they don't charge each other. Yeah. Okay.
Not in this case.
Motion?
Well, the motion is to apply for the $48,000 grant from DCED for the Lebanon Valley Rail Trail to get a larger shed and a larger tractor to
Yes.
maintain.
Was that 48?
I think it's 48.
Yes, it is.
Yeah.
All right, any discussion? If not, all in favor of the, I'll second the motion, by the way. All in favor of the motion, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
And Commissioner Lithry will need your signature and the staff to seal the resolution. Jamie has it. We can get that done in the next few days, and then I'll work with John and Julie, and we'll submit the application. Do I have another moment to talk about something very important?
Of course.
Commissioner Litz, Jamie, and I, and others were in a meeting on Tuesday with First Energy for Med Ed. Med Ed came to us, or First Energy, and their staff and their engineers. They need to close down a small section of the rail trail for several weeks due to the high transmission lines being replaced between Wilhelm Avenue and the Expo Center. So today and tomorrow, all the details will be worked out in that regard. I think, Jamie, you'll probably be involved in the field view on Friday. There will be announcements going out across the community to the residences and businesses in the area. We're going to have it on our website as well, but for a short period of time, and we don't know the duration yet, but it could be several weeks, that 1+ mile section of the trail is going to be closed for safety reasons. Those high tension wires and poles that are out there, pretty significant when you're replacing them. I think they're 60-foot high poles.
Yeah.
When you get a boom in there and you're moving things around, we just can't have rail trail users in the vicinity. So the rail trail will be closed down for a short period of time. The good news is, though, First Energy wants to come back after the work is done and make significant improvements to that section of the trail. So that's a real plus for rail trail users here in the county and for visitors coming to the area. And if John Wengert was here, he would say to you, that's nothing new, because Ned Ed was one of the initial partners with Lebanon Valley Rails to Trails, Inc. in doing a feasibility study to look at where the rail trail might exist in Lebanon County. They were a partner, they were a financial partner, so this is just keeping in line with all the things they've done with us and with you over the many years.
And the improvement, the big improvement is it'll be mechanical, correct?
That is correct. From Wilhelm Avenue going south out to the Expo, it's stone dust right now. Some of that is in an area where it's always a little problematic with moisture and the like. So this will make the rail trail really a better facility.
I think Med-Ed still had to run that by them. Their
Yes, yes, yeah, because the
superiors
contractors.
back at Med-Ed, they haven't guaranteed that yet. That's
Yeah.
probably gonna be something we find more about tomorrow.
Yeah, but that would be the ultimate if they
Yeah.
could do that. And if they can't, they're at least going to restore the rail trail to its existing condition, which the fine stone dust needed work anyway, so we're gonna get that out of this at a minimum.
But if they do pave it, it'll take less maintenance.
That would take less maintenance. And, you know, obviously it's easier to ride on that sort of surface, easier for us to maintain and the like, so that's a real plus, and we just wanted to update you on that as well. So look for some news on that. I think the media will be notified by First Energy, maybe over the weekend. Could be as soon as
And
the
they're,
weekend.
and they, Med-Ed, will also be responsible for signage, closure signage, and all of these things, so hopefully, and hopefully it goes, they're gonna under promise and over deliver, and it goes a little
Yes.
faster than we expect, so.
Yeah, by closing it and not having to worry about, you know, maintaining pedestrian or bicycle traffic, this is gonna save them significant time in their construction of the new utility poles. So really good news. John mentioned to me as well that we soon may hear from PennDOT on Phase 6C, which goes from 22nd Street from Chestnut up to Cumberland. That's a major project for us, $2 million. You committed funds to that. We might hear in the next few weeks about that grant.
We expect to get notification about what the awards are with regard to the transportation alternatives set aside funds. That was the program that we applied to. I think there was $18 million total this last year, and there was $110 million worth of requests.
Wow.
Competition. I think we get from the project.
Yeah, thanks to you and others, the local share of that was huge, huge, and very well received by PennDOT. I can tell you that
Good.
because I spoke to them. Yeah, very well received.
That's exciting.
Yeah, it is. That's it from us. Did we take it up?
You did well. Jonathan, do you have anything to tell us? You good?
I think we started early, John.
Yes,
Sorry.
I'm sure Tom covered it.
Well, that's some information.
Thank you.
You're very welcome.
We'll appreciate your good work and your volunteerism as usual, and all that you bring to this project and have brought over the years. Thank you very much.
We thank you for your longstanding 25+ year commitment. It's just been awesome working with you and others. And this rail trail is going to be a reality here in the next 4 to 5 years.
Oh, quicker.
No, we wish, Commissioner, but it's going to take 4 to 5 years. Thank you for your
Well, I'll
time.
keep cracking the whip.
We know.
Okay, very good.
Thanks.
Thank you.
I can do my things here.
Sure.
Steve will do that. The first thing I have is a request for extension on the Marcellus Shale grant funds that were awarded to the Lebanon Valley Conservancy. We're getting more and more of these since the pandemic really kind of, required everyone to put things on pause. But the Conservancy was approved for $15,000 in Marcellus Shale funds back in May of 2018 for the John Wangert Memorial Park, the amenities in that park. So they're a partner in that. This was funding provided to them to be that partner. However, the park has not been developed as of yet, and they're asking for some additional time and hope for it to be completed by the end of 2023. So it's for your extension on that.
Okay, I'll make a motion to approve the extension.
Second the motion. Any questions or comments? Pretty self-explanatory. If not, all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
I have some appointments and reappointments to make. The first being 3 reappointments to the Lebanon Transit Board. They are Franklin Shearer, Lowell Brogan, and Ed Anspach. All 3 have indicated that they are willing to serve another term on the board.
I'll make a motion to approve Franklin and Lowell and Ed as reappointments to the Lebanon Transit Board.
And I'll second the motion. Any questions or comments? Hearing none, all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
For the Commission for Women, I have a new appointee by the name of Jenna Wrights, who is interested in serving on the commission. She would begin her first term March 9th of this year and expire on March 9th of 2025, at which time she'd be eligible for a second term.
Make a motion to appoint Jenna Wrights to the Commission for Women.
I'll second the motion. Questions or comments? If not, all in favor, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
And just to inform you then, Ann Decker and Donna Williams both are finishing out terms that expired, or have finished out terms that expired on February 9th. And so we thank them for their service. They've had sought reappointments.
And there's a note about Maribel. That word.
She's the new chair.
Oh, Maribel is an existing member, is going to be liaison?
Yes.
Yeah, I can see that.
I believe she related to, is it the same Maribel?
I don't know Maribel.
Raphael's wife?
Yes.
Awesome. Okay, gotta keep track of all these relationships.
All right, then I have an agreement between the County of Lebanon, the Redevelopment Authority, and Lebanon Valley College for the administration of RACP, Redevelopment Assistance Capital Grant Program funds that the college is receiving. They are receiving $1 million to renovate the Heilman Center, relocate its CURE clinic, C-U-R-E clinic, from downtown Anvil. This would be a 20,938 square foot renovation. And by this agreement, the county would serve along with the redevelopment committee as the applicant and administrate the grant. And the important paragraph in this whole agreement is number 8, and that is that the college is agreeing to indemnify the county for repayment of any ineligible expenses or other potential financial exposure which may be identified in a follow-up audit after the grant is finished. We've done several of these. We've never had any ineligible expenses. The reporting for it is pretty rigorous. It's hard to imagine how something would slip through and then only be caught in the audit, because there's a ton of reporting that goes along with accounting for each dollar of these RACP programs. It has to be, in fact, it even has to be materials from steel in the United States. Those sorts of things all have to be recorded and demonstrated. So, ask for your approval on that agreement.
I'll make a motion to approve the RAC agreement with the college and the redevelopment authority to move the Highland Center from Anvil.
I'll second the motion to approve the cooperation agreement for this RACP. Any questions or comments? Yes?
Is that the physical therapy center that they offer?
The Heilman Center, not
Or this cure?
The Cure is something that's already located in the, they're relocating, CURE clinic, a free physical therapy clinic for
Okay.
the un- and underinsured, is that the same thing?
Yeah, because their PT students work on people.
Yeah, so they're apparently moving that to campus.
Yeah, because it's like right on 422 there.
It's downtown.
Yeah, okay.
Good.
All in favor of the motion, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
Okay, last two items I have are hotel tax grant fund applications. The first one being from the Pennsylvania Chautauqua Foundation. And they are seeking funding for the Mount Gretna Visitor Center Summer Ambassador staff. Total cost of $7,560. They're requesting $5,000 toward that. And they point out in their application that Mount Gretna is a destination for thousands of visitors every year. And this would contribute toward, I should have underlined it here. They hire ambassador staff at the visitor center and offer technical support for the speaker series, greet the guests, answer questions, refer them to points of interest and of historical significance in not only Mount Gretna, but other areas of Lebanon County. So that's what the funds would be used toward.
Make a motion to approve the request from the Chautauqua for $5,000 tourism grant.
I'll second the motion. Any questions regarding this grant request? Hearing none, all in favor of the motion, please indicate by saying aye.
Aye.
Opposed, same sign, so moved.
And the last one is the Community of Lebanon Association through Craig Gates, is the who had filled out the application. They are seeking funds to provide flowers in hanging baskets and planters that line Cumberland Street from 6th Street to 9th Street through the city. And that is a $16,500 project. They are requesting $10,000 toward the project. It's something to do each year. And they provide hanging baskets and flowers from Stony Bridge Landscaping. In addition, they are hired to water and maintain them from May through September.
Make a motion to approve the CLA request for a $10,000 tourism grant, hotel tax grant, so they can purchase flowers for downtown.
I'll second that motion. Any questions? If not, all in favor, please indicate by saying aye.
Aye.
Aye. Opposed, same sign, so moved. And there was one other, who was asking for an extension? Also.
Yeah, that was just last year, though. We're still, yeah, they're still, they didn't.
Okay.
Belt and suspenders.
Is that it for Ms. Lane?
Yeah. One of the managers for Steve is coming into the meeting. You didn't stay there. The camera's up above you.
I want to see it.
Oh. You ready for these guys?
Well, yeah, you guys want to sit back here though, or reconsider?
Bailey just signing in now, so. They won't be able to see you. That's fine, okay. There he is. Morning. Brett and Mike are gonna be off to the side here, out of view for you, so,
Okay,
but they said that's okay.
that's good.
Good morning. If you'd like to introduce yourselves, you may start, and then we'll proceed.
That's fine. Thank you for allowing us to come in this morning. We have Mr. Bailey Davis, he's the managing director with ClearBridge. They are one of the equity managers that we utilize with the pension and have for quite a number of years. And he's going to kind of address some things on the markets and all that and give some updates with that. Myself, I'm Brett Holland with Stiefel, and Mike Battistelli with Stiefel as well. To get started, just real quickly before we get started, we've not been able to necessarily speak to everyone directly here or individually, but we just wanted to pass our condolences along with Commissioner Ames's passing, and I know that you all lost a coworker, but a friend as well. And we certainly, I don't want to speak for Mike, but we both very much appreciated our time, and we were able to work with him and interactions with him, and always appreciated his practicality, quite frankly. So, but we just wanted to mention that to you. Anything you want to share with them? Okay.
Thank you.
Andrew, you're expecting?
Yeah.
Just want to get some clearance on that.
So if you take the report here that we normally share with you there, and if you'd open up, if I could ask you to open up to page 4, on the bottom right-hand corner, 4 of 11. And this is the normal report that we go through with you. This is ending the 4th quarter, so it's ending December 31st, and as always, or as usual, Mike will have updates through here in the last day or so. But if you look there in the top left-hand quartile, top left-hand corner of your booklet there, it has the total portfolio for the current period, which would have been the 4th quarter of 2021. The balance started at $146,225,784. And during that time, there were withdrawals of $2,608,052. And there was appreciation or growth in the portfolio of the $9,949,037, and gave us an ending balance at the end of the 4th quarter of $153,566,769. I kind of said that strangely, sorry about that. So it gave us a total return at the end of the quarter of 6.84%. And then for the year, if you kind of move 2 columns to the right of that, you see the year-to-date number. Again, we started the year at $139 million and took out $6.8 million in the way of withdrawals. And the return during last year was $21 million, again giving you the balance of $153 million at the end of the year. So it was a return of 15.7% return last year. Any questions on that at all?
Assumption 725.
Yes.
Between 7.25 and 7.5.
Me too, I've never had that.
For sure.
7.25.
So.
I think it's 7.25. In fact, it was lowered a few years ago by 1/4%.
I can't remember how much though.
There we go.
I withdraw the question.
That'll teach you.
Bottom right-hand corner is just your allocation, kind of from a 30,000-foot view. It's showing cash equivalents at 0. It's actually, cash equivalents is a little bit higher than that. It's less than 1% right now as an overall whole. Equities there on the right side of 64%. Fixed income of 27%, and what they call alternative investments, which is the REIT portfolio of about 8%, is what that was at the end of the year. And I'm going to ask you to go to page 6, if you would. Page 6, probably should have highlighted it, but down here on this kind of 1, 3, 5, and 10-year period, the 1-year period, again, we just mentioned that if you see the 15.7% was the return last year, I mentioned that. The last 3-year average per year has been 15.31. The 5-year average has been 10.3%. And then Commissioner Phillips probably what you're referencing some there. The last 10 years has been 9.24. And that's some years higher, some years lower, but
This keeps pulling us closer to the assumption.
correct, yes, sir. So, so Mike has updates. Just one thing we did just want to mention, not to throw cold water on the conversation, but a lot of professionals that we would respect their opinion and so on, and Bailey might even have a comment on this too, but a lot of folks are saying the next 10-year expectations in the equity markets are probably going to be a little more muted than what we've seen in the last 10 years. It doesn't mean that things are going to be bad or horrible or anything like that. It's just things kind of ebb and flow on a global basis over time. So expectations are probably to be maybe a little bit lower than what we've seen in the last 10 years. So,
I think part of that, just to kind of piggyback on that, part of that is the last few years, well, even going back to the financial crisis, there's been a lot of monetary fiscal policy, and that's starting to get unwound now. I'm sure Bailey's going to mention this, but the Federal Reserve is looking at some rate hikes this year. They're not buying their bond purchases on a monthly basis. So all those accommodative policies have been beneficial to the market, and now that's being taken away. So it's gonna have an effect on returns to some degree. So we're just kind of getting prepared for that. So I'll give you an update here. This is through yesterday. As most of you probably know, just listening to the news, the market has been off to a kind of a rough start, something we kind of anticipated to some degree. But the current balance on the pension plan is $143,187,088, and currently it's down 5.84%. And there's been about $1.2 million of withdrawals so far between January and February. And allocation-wise, it's changed a little bit. The equities have come down, REITs have come down just a little bit, but we're at this point, we're not really looking to make any allocation changes. We're kind of comfortable with where we're at. We're within the investment policy statement guidelines. And I think for now, we're probably comfortable staying the course. And just to give you some insight, I know Bailey's certainly going to talk about ClearBridge and the piece that they have. But just to give you some insight, we've had Kevin Karan in here in the past from Washington Crossing Advisors. They have steadily been building up some cash. Markets were kind of high. They're a value-oriented manager, so they were having trouble finding good value. So they currently, and I think this is a good thing for where we are right now in the market, so currently about 15% of their portfolio is in cash, waiting for this opportunity. And it'll present itself where they can maybe go back in the market and take advantage of that. But that's just one example of how your managers are kind of trying to navigate through changing markets. Okay. Any questions? Okay. So again, I think what we'll do now is turn it over to again Bailey Davis. He is a managing director, portfolio manager with ClearBridge. They manage about 14% of the county's pension plan. We've asked Bailey to join us today to kind of give some feedback on their portfolio, but also I think they'll probably navigate into a little bit where the markets are currently and some thoughts regarding that. So I'll turn it over to Bailey.
Great. Well, thank you, everybody. It's a pleasure to speak to you this morning. And we certainly appreciate all of your support with the ClearBridge large cap growth portfolio that we manage for Lebanon. And this is, as alluded to, I think I've been with ClearBridge Investments now. We're based out of New York City, obviously, and we manage around $200 billion in total equity assets. And I've been with the firm now for 30 years. So been through a few of the cycles that we've seen in the markets, and clearly, as we're seeing right now, there's certainly some challenges that are out there from a market perspective, but and from a pandemic perspective. So there's a lot of cross currents right now that we're dealing with, and a lot of concerns, obviously, with things like inflation, interest rates, the geopolitical risk with Ukraine, Russia, and in general, we feel there's just a large amount of uncertainty in general right now, and that tends to cause a little bit of uncertainty for markets as well, and that uncertainty is usually reflected in some sort of volatility as we're seeing. And so you've had some big time kind of market pundits that have come out, and some people are calling for the fourth of all the major super bubbles, which if you go back, it would be the Nikkei bust, the .com bust, certainly the great financial crisis, and now they're looking at this period as a really big period of uncertainty. And I don't think that's uncommon to hear that kind of rhetoric taking place, especially as we've seen very strong markets over the last several years. So it's natural for big time kind of market pundits to come out and make these kind of grand predictions. So I think the bigger question is that we're asking ourselves is really, when are the markets going to run out of steam and maybe even retreat? So clearly until last year, ultra low interest rates have powered the market, and it drove up price to earnings ratios. Really the price that investors would pay for a dollar of earnings. And in 2021, business actually became much stronger, even with the shutdowns that we were seeing. But I think the surprising thing, and this is something that we're always looking at, is earnings actually exceeded prior expectations, and that's coming out of a pretty strong period in 2020. But our view is that this should actually continue as the consumer is really quite liquid. Debt levels are very, very low relative to history, and wages are actually rising, as we all know. So money supply, M2 as we like to call it, is up over $6 trillion in the last 2 years. So there's really money everywhere right now. And I think, even early this year, we had seen stocks kind of rise to extremes, and they've been hit hard. But from our vantage point, this kind of correction in the market that we've been witnessing has really started back in November of 21. And I think it was necessary to a certain degree. But at the same time, we actually feel that a lot of the pain that's been experienced, specifically on the growth side, has already been, as we've experienced a lot of it already. And many stocks, you look at the NASDAQ, 50% of all companies in the NASDAQ alone have retreated over 50% from their highs, which is an amazing statistic. You have to go back to kind of the dot-com crisis to hear similar types of statistics. But I think what's our job is when you get those periods happening, is then you're trying to look through kind of the carnage in the market and really find areas that look attractive from an investment standpoint. So a lot of pain has been experienced. We actually think that on the inflationary side, the market's already pricing in roughly 4 interest rate hikes. And there's a lot of debate about those interest rate hikes. How high are we going to be in terms of how much is actually going to hit the system itself? A lot of people feel that we're way behind the curve and that there's a lot of interest rate hikes that are necessary, and subsequently that's going to have a really negative effect on the overall economy itself. But I think sometimes you got to take a step back also, and we kind of look at the Wall Street side of this in saying, hey, look every single weekend in terms of somebody else coming out and predicting how many different interest rate hikes are going to occur in the marketplace. We haven't even had one take place, by the way. And right now it's turned into really a contest amongst Wall Street strategists to say who can predict the most interest rate hikes in the marketplace. And we've even heard a number of strategists come out and say that we're going to see 50 basis point increases happening along the way. I think you got to take a step back and say, look, we haven't had a 50 basis point increase on a single rate hike since Greenspan in 2000. So, are conditions today that much worse than they were back then? Probably not. But at the same time, we think it would probably actually be good to get rates a little bit higher in here. The macro numbers might show some slowdowns, but in our view, things were just running too hot. And when things are running too hot, we need to take some medicine at this point to actually cool things down a little bit. But right now, the other thing that we're watching is that, clearly there's a disconnect, because right now fundamentals aren't really driving individual stock prices also right now. It's more, you're seeing trading taking place in groups and broad market fears, and that's kind of driving different sides of the market itself. So, when we see that actually occurring, that's where you see you want to step in and start to take some chances. Look at your whiteboard list of companies and say, look, is this something that is now pretty attractive from an overall valuation perspective? And is this something that we want to start to act on? So we're more in that kind of mode. from a positioning standpoint versus just kind of coming into the market and raising a lot of cash and stepping away from this kind of backdrop that we're experiencing. So, you know, net from an overall economy kind of standpoint, we're really seeing no indication that we're in for a hard landing that's going to be caused by sharply rising interest rates, and that would really be that view would really change in saying, you know, unless the Fed becomes convinced that this bout of inflation is sticky. And right now, you know, that inflation that we're seeing in the marketplace is really being ruled by wages, commodity pressures, and rents. That's really the biggest portion of inflation today. So we actually see good earnings growth going forward. So even though last year was a very strong year from an earnings standpoint, we actually think corporate earnings this year are going to come in somewhere around 10% higher than they were in 2021, which is pretty good because the market ultimately bases itself upon what are the corporate earnings for the S&P 500 going to look like. And with a backdrop of still very low interest rates and rising corporate earnings, that tends to be a pretty good backdrop for stocks. So I would say we're overall not in the bear camp. We're not in that camp that's saying, look, this is going to be a negative year per se. We actually think that even despite the down January and kind of the volatility that we're experiencing in the markets in February right now, that we could still be positive on the year. Now, as mentioned, the performance in the markets has been exceptional, and the portfolio's done very, very well in the last few years. Would it be normal to see the market or the returns in the strategy in the large cap growth portfolio come down a little bit? And we think we're in probably a bit of a more normalized kind of period where we're looking at probably more 8 to 10% net growth on the year in say 2022. And then could we actually get back to a period where we start to see a resumption in higher growth? That wouldn't surprise us, because I think one of the things that's not being talked about a lot is that with Omicron, with the virus that we've experienced, you know, clearly we had another shutdown in the economy. I know just from ourselves, you know, our office was open and then we shut down when Omicron hit, and we're not going back till March on a full-time basis. So we're going to get that true reopening, we feel, in the spring months of this year, and that should be a good thing for the overall economy. So we actually think that inflationary pressures, inflation's the number one talked about word in the news today. We actually think that inflationary pressures are peaking and are more likely to be coming down here. And we don't think the Fed is going to have to be that aggressive on the rate side to help combat a lot of those inflationary pressures. So that should net be a very good thing for stocks. And the other thing to keep in mind is that markets always have a hard time leading into that first interest rate hike. If we go back to the 1950s to where we are today, markets always have a rough period leading into that first interest rate hike. So we'll get that first interest rate hike in March at some point, but this is normal kind of volatility that we're experiencing. And the other side of that coin is we're also in a midterm election year. So if you look back at midterm election years, they also tended to be kind of choppy for stocks. They tend to be a little bit more volatile, and then we get kind of back to a smoother kind of glide path. So with all of that kind of contributing to what's going on, I think it's kind of normal to see a little bit of this volatility that we're experiencing, especially coming out of some of the strength that we've witnessed over the last couple of years in the market. So where are the opportunities, I think, is probably the more important thing in terms of really what we're focused on in the large cap growth portfolio, and we think there's plenty of opportunities. You know, we've always looked at growth in a few different ways, meaning, you know, when we build the portfolio for you, we want to have access to a number of different types of companies in the portfolio. So the kind of the really the anchor of the overall strategy itself is going to be in those kind of stable growers, the high quality names that are really just growing 2 to 3 times your GDP rates of return, no debt on the balance sheet, generate a lot of free cash flow, actually could pay dividends at the same time, but they're not growing at the highest rate. You know, these aren't the Shopifys of the world per se that are just growing crazy, but also have tremendous volatility attached to them. These are companies like a United Healthcare, for instance, or a Thermo Electron in the marketplace, real steady Eddie kind of growers. And that's 60% of what we're doing within the portfolio. And then we're going to kind of work the tails of the strategy itself. So we want to have some names in the higher growth side of the market itself. So we call it higher beta, which means a little bit higher volatility, but there's not that many of these companies in the large cap growth arena that are growing at 20 to 30% per annum. So we want to have some of the access to those types of companies. A company like NVIDIA, which is being talked about a lot in the news with its interesting franchise for gaming, chips, the Web 2.0 as we know it today. They're the kind of the backbone of that. This is a company that's growing very, very rapidly. That would be placed into that kind of category. And then on the other side of the spectrum would be some of the lower growth rate companies, but these are companies that are actually performing well today. These are the economically sensitive types of companies in the marketplace, but their valuations are very cheap. So in many cases, they could actually look like value stocks. But nonetheless, we think that they're poised for growth over the next couple of years. And those are companies that are a little bit different from your typical growth kind of profile. They're a little bit more cyclical in nature, so we underweight them. We're going to have 10 to 15% in the overall portfolio. But you could think of a company like a Grainger, for instance, industrial equipment rentals, a company like Tractor Supply, for instance, with a really interesting offering for consumers and small businesses. They're going to do very, very well. They're going to be able to raise pricing during inflationary periods also. So when you put it all together, what we're trying to achieve for you is really an all-weather growth approach to growth. So we're going to have access to a few different types of areas of the market itself, and that should help us to allow us kind of to perform and do well with a kind of an uncertain economic type of backdrop. So that's kind of the way we look at things right now. Michael, I can stop there, or I can continue and open up for questions if that's more prudent.
Yeah, I think for now, we appreciate your insight, particularly on the market and your portfolio. I think right now, if there's any questions, we'll take those. And
No.
When you talk about a higher beta on some, what kind of a number are you looking at?
From a percentage standpoint?
Yes.
Okay. From a percentage standpoint, generally it can range anywhere between 15% of the portfolio up to roughly about 30% of the portfolio. So that side is kind of interesting right now, because when you look at the market, the higher growth names have actually been hit the hardest. And even on some of the volatile down days now, what you're seeing is that particular side of the market's actually holding up a little bit better. So it's interesting because, the kind of the old adage, the baby being thrown out with the bathwater, when you see these corrections taking place, especially amongst your kind of NASDAQ-y, techy, higher growth rate types of names, you've had a number of these companies that have really just seen their stock prices decline quite a bit. So from an opportunistic standpoint, that's really where we're finding more opportunities right now. And we actually think that as we start to continue to progress through the reopening into the second half of the year, a lot of the typical kind of, energy related cyclical types of companies, they're not growing at a very rapid rate. They're obviously very dependent upon commodity prices to help fuel some of that growth as well. So when you get into this kind of second half of the year, a lot of these companies that are still generating free cash flow, they're profitable, they're growing 20-30% per annum still, despite the backdrop that we're seeing in the economy. That's where the market's going to actually return to. So a lot of the value cyclical areas right now are having their day in the sun, but as we continue to progress with the economy itself, we think that you're going to see the market start to come back to a lot of these companies because they're actually looking fairly cheap on a net basis, given their growth rates and they're profitable at the same time. So, you know, a company that we've actually been building right now, it's a newer company, and it I like to use it because I think it kind of speaks to the backdrop, which I'm sure many of you have experienced, where one of the hardest things that small and medium-sized businesses are experiencing is the difficulty in trying to hire workers. You know, that's something that is challenging. And if you're in a small industrial company or a machinery company, your orders are probably off the charts. But to fulfill a lot of that business and grow that top line like you want to do, it's very difficult because you can't get people to fill a lot of these types of positions. So a company like UiPath is interesting because it does provide kind of architecture, and it also provides physical capabilities on the robotics front to do the most mundane tasks that people don't want to do. You know, so these are some of the assembly line types of positions, but cleaning types of positions, really everything. They build architecture for those specific tasks and help increase productivity. So we like a lot of these kind of picks and shovels types of plays right now that we think could help companies from a fulfillment standpoint in terms of, you know, really increasing what they're doing. You know, another company obviously very well known in the room would be Amazon. And Amazon we've owned since 1998 in the portfolio. Obviously we've trimmed it several times along the way, but you look at Amazon over the last year and a half, it hasn't been a great stock. It's actually kind of gone sideways for the most part, but Amazon at the same time has been on a major CapEx spending binge, meaning they've been investing in the business, highest amount of investment that they've ever done in the history of the company through 2021. And that investment is largely completed. So now it's really taking advantage of all that investment and increasing the revenues that they're doing because the CapEx cycle is done. In fact, they've done so much, which is an amazing statistic to me. If everything shut down in the U.S. and Amazon was the only company left in the U.S., Amazon would have the ability to fulfill every single 75% of the U.S. population, everything that they need would be able to be fueled by Amazon alone. So Amazon is one of those unique companies that is incredibly large, but at the same time, they've reinvested back into the company at such a rapid rate, disrupting the supply chains and whatnot along the way, that it's just it's kind of a freak of nature type of company.
Are they going to get hit with, you know, being too big and will the government make them cut in half?
Well, that's a good point. I think the regulation side of and how it's related to some of the major companies, the Amazons, the Microsofts, the Facebooks of the world, Alphabet clearly is still a source of contention. But I think from Amazon's standpoint, what we like is that really they're largely, you know, they don't really need to acquire per se. You know, they've acquired some of the MGM assets to help build out their kind of content business offerings and that still hasn't done. So to your point, it shows you the difficulty in getting deals done. And we think that even a company like Facebook, or I should say Meta, you know, probably one of the most hated companies in the country, would actually be spending a lot more in terms of acquisition type activity, but due to the regulatory hurdles is really being prevented from doing a lot of those types of deals. But But Microsoft, on the other hand, looks like they're gonna be able to get through their largest deal that they've ever done, which would be buying Activision on the gaming side. You know, that was a $70 billion deal, and it doesn't look like they're going to face any pressures from that. And I think part of the reason for that is because of, you know, there's clearly outside competition. You know, some of the Chinese competitors are clearly out there, and you saw it with TikTok and how quickly they're growing as a Chinese-based company. So I think the U.S. is cognizant of some of those outside pressures at the same time.
Thank you. I just heard the higher beta and I was thinking higher risk. So thank you. Appreciate the explanation. Anything else? We lost.
Thank you, Bailey. Thanks for joining us.
Thank you.
Thank you
Thanks
very
for your
much.
time.
Yep.
Thanks, guys.
Bye-bye.
All right. Yeah, thank you very much.
Okay.
Yes.
Okay. Thank you.
Maybe Amazon will supply the stuff you need for the 911 center. 75%, wow.
Next agenda. Ready?
Yep.
It's the devil
It just-
in my house.
It just shows the opportunity in America, you know, that somebody will come up with something and just, that you never heard of, and all of a sudden it's absolutely.
Yeah.
Excuse me, good morning. Good morning.
Got the big guns today.
I got the policy. The community project. Can we borrow it? Sure.
Morning.
Morning.
Welcome back, and we just have some business to attend to, but if you'd like to introduce your folks, that'd be great.
Good morning, everyone. My name is Rafael Torres. I'm the founder, one of the founding members of WEPA Empowerment Center. To my left, I have Al Sharamina, a board member. To my right, I have the secret weapon, Maribel Gonzalez, my wife. And the real secret weapon, Bill Campo, our treasurer for our empowerment center.
Okay.
See it up a bit?
Yep.
So, this is, I think, your third time here. Just a few weeks ago, you were in to detail out a request for American Rescue Plan funds for the WEPA, and so the reception you got from the commissioners and information you provided and so on, I think they are prepared today to take action on that. So if you want to provide any more information or recap, I guess, essentially what the program is and what the need is for the funding, then we can go from there.
Yeah, that's fine.
Good morning. I'll keep it short and brief. We have been meeting quite frequently with the community at large. It is a community project. We need to invest in the growth of our community. And that is what we saw when we started developing WEPA, the Empowerment Center. What we did was we chose to replicate a model that's already in Lancaster, Pennsylvania. It's a successful model. It's been in existence for 8 years. It started out in a little small space, and now in 2022, after 8 years, it has expanded to a second location. They added 16,000 square feet, and then the latest addition is 55 or 65,000 square feet in the city of Lancaster. It has been replicated most recently in the city of Reading. They actually have a center up and running. The city of York is about to unveil their building and their tech central in next month. And Lebanon is next, and why not? Well, the reason why is because our community's in pain, and we are all studied out. Since 1960, they've been saying that we need a training center. We need a center that is inclusive and it's for everyone to get the skills and to get the trainings that they need to become marketable members of our community. So, you know, we're all studied out. I still have to continue doing the studies, and the numbers aren't good, you know. They talk about, you know, the students in the local school district, how 90% of them are just barely making it. Their homes are barely making it. Let's start with the adults who are responsible for those young adults that are coming up. We need to take care of them. We need to provide opportunities for them. It's not that we're doing the work for them, it's that we are bringing opportunities for them to get better and encourage them. So we look at them in a holistic way. They come in, they tell us their story, they tell us what their needs are, and in conjunction with community, you know, nonprofit agencies or whatever other agencies are available in the county, we work together. We can't do it alone, but we need to provide this space that we have identified with opportunities to get certified and trained in the construction trade, technology, the health care industry. We're looking at the property that we're looking at and doing the ARPA ask. We'll also have a culinary arts kitchen. Remember I mentioned the word holistic, so we're gonna have folks that are working in the building with the individual as a whole. It's not just running them through the program and forgetting about them. It's about making sure that systems are in place. So a full-time social worker in the building, a behavioral health specialist that's going to be available to the students. You have to get people whole up here and in here in their figurative hearts in order to get them better on the backside, on the back end. We have a building that is available. It's here in the central business district, so it's accessible to everyone. Walking, is public transportation, folks that are living outside, and the ones that can't get to it, trust me, WEPA has a little wave action in its logo. We're gonna find the ways to get around it and get through our challenges that we have. And that's what COVID did. It exposed everything that is good about our community, but also the bad, and we have to make sure that we do better on the back end of getting out of the COVID mess, but not necessarily just COVID, just the future challenges. The classes are all in English. They're being done by instructors from HAC, Harrisburg University. We're bringing in all the horses. You know, all the troops to come in and provide the training. So we specifically are not going to be doing the training. We're bringing in folks from ACT, being one of our partners, to bring the instructors to help folks in the different areas of occupation. We did ask for $750,000, and that's just a little drop in the bucket. It really is. Because it's gonna take a lot more than that to get people through. First of all, the building needs renovating. It needs to be up to date for 2022 standards. This is gonna take some investing in that. We're also gonna be providing free or low cost, minimum cost training to the folks. So the most that we see them buying into it is $150. It's registration, it's a background check, they're not gonna be turned away. We're gonna focus on our folks here. Unfortunately, some other groups have ideas about bringing, you know, workforce, you know, folks from outside of the county, outside of the state, across state lines. No, we need to take care of our families here. We need to take care of our communities first. And then once we're all taken care of, then we can open it up to everybody else, right? Because we want to be a welcoming community. We're not going to be the savior and the savior of all the problems here, but we need to have a place. If we do not have a place to do the meaningful work that this community needs, then we're just gonna be, we're just gonna keep seeing the same struggles that are occurring, not just today, but have been for the past 20, 30 years. It's gonna take the community as a whole to buy into it, and we have letters of support. Someone asked me this morning, said, how many letters have you gotten? I said, well, I got a good amount, over 50+ letters of support, but it's not just a letter of support. There's other things that are needed in the city. I do have Bill Campbell with me because he is the person that's handling the budget. Some of the numbers that we have shared previously are based on assumptions, right? And these are programs that we're working on, so we're working with private foundation donors, we're working with folks out of Lancaster, so it's gonna be a regional effort that are helping us to access funds that are available to the community. That's pretty much WIPA in a short version, so if anyone has any questions for any of us up here, please feel free to ask.
Commissioner?
No, I don't have any questions, but for the public, they'll think that $750,000 is a lot of money, and.
Yeah, I did, the characterization of drop in the bucket is, I know you didn't mean it, that's not a meaningful grant.
No,
Because to us, it's a huge commitment. So I just wanted to clarify that is, from our point of view, this is a very big commitment to
Absolutely.
jumpstart this project, and we are buying into that to that extent. So I just wanted you to clear from our point of view.
And to add to that, Raphael described my role briefly, but the way I see it going forward is a bigger role is to ensure that we've got the right controls in place from a cash management standpoint, accounting system, reporting, all that are areas I have experience with throughout my career since I retired. I'm looking to use them in a different way now, but all that is being planned for. So I think it's important we all understand that, it's just not going to be a bucket here and money's coming in, but it's going to be a strong system, internal controls in place.
Make a motion.
I'll make a motion that we use $750,000 of our ARPA funds to help kickstart the WEPA project and purchase the building on South 9th Street, I think it's South 9th Street.
Interject, I didn't get in quite fast enough. I just wanted to mention that, and we discussed this on the solicitor's advice, because it's an acquisition of an asset, of a liquid asset, that we would be in a lien position, the county be in a lien position on the property in the event that at some point it's liquidated. Since these are federal grant funds being passed through, that be the case. So
Yes, I
we
would
make that
amend
part
my
of the
motion to include a lien agreement so that, God forbid something doesn't work out and the federal government expects their money back, we can accomplish that.
Okay. Hearing that, I'll second the motion. Any discussion or any questions from anyone? Not all in favor of the motion, please indicate by saying aye.
Aye.
Aye, opposed, so moved. You have your building.
Thank you.
Thank you.
Thank you. Again, thank you for your commitment to this project. There's a lot of volunteer hours involved here, and we're very excited for what this can mean to Lebanon County.
And I know all of our employers are really looking for employees, so whatever you can do to bring
To upskill.
people, up to the level that they need to be hired. I mean, people are paying very well these days, so it's exciting that we have this opportunity to partner with you.
And Raphael mentioned the training will be in English, but we also want to, bring out that it's also going to be bilingual. Because one of the barriers that employees are facing is the language barrier.
Yes.
So if they need to upskill just in a language, we're going to have that available.
Yes. Thank you.
Do you have anticipated closing on the property, assuming sometime in March or maybe April or?
March 18th.
Okay.
Well, that's not too far away.
Nope. And if you could let me know who's going to be doing the settlement preparation on your part, on behalf of you, if you already have someone doing the legal work for that, let me know who that is, and I'll put you in touch with the solicitor.
Would you be providing a draft agreement on the lien process
Yeah.
and how that would ultimately be removed?
Yeah, that's what I plan to do, just have them connect with and then we'll need some form of letter of request to draw down the funds.
Mhm.
And we do have half of the ARPA is on hand, so we'll need some form of request to draw down so that I can then do the check request. All right? Okay.
All right. Maribel, congratulations on your continued work with the Women's Commission. We talked
thank
about you earlier today. So.
Oh, thank you.
She does a nice job.
I enjoy it and I've learned a lot.
All right. Anything else for this phase? No? Thank you. Good luck.
Thank you all.
Thank you.
No?
Make a motion to adjourn.
Thank you. We stand adjourned. Thank you for your attendance.